Good morning, everyone. You're welcome to today's edition of the Vetiva Breakfast Meeting, and the session is brought to you by Vetiva Capital in partnership with Frontier Africa Reports. In today's session, we'll be getting the usual rundown of the equities and fixed income market by our traders, and we'll conclude with headlines from across Africa by our media partners at Frontier Africa Reports. Before we go on, we'd like to remind everyone that the session is being recorded and it's being streamed live on our Vetiva Online Facebook page if you prefer to view or join from that platform. It is also set to last for 30 minutes, and the session will be shared, the recording may be shared with third parties. During the course of the meeting, we will be having a Q&A segment, and you can send your questions in using the chat function available on Zoom. And if you're joining us from Facebook, you can make use of the comment section. We'll now be starting off with Simbiat, and she'll be taking us through some equities market. Good morning, Simbiat.
Good morning, Victoria, and good morning to everyone. Like she mentioned, I'll be doing a review on the performance of some of the equities market across West Africa, and I'll be starting in BRVM. The BRVM index closed up by 52 basis points yesterday. This was supported by gains in the consumer goods space and also the financial sector, specifically the banking industry. We saw Solibra in consumer goods continue its upward trend with a 7.5% price appreciation, followed by a couple of banking names like Bank of Africa for Senegal, Niger, and Cote d'Ivoire, all in the top gainers chart. This led to a 77 basis points gain in that sector. Activity levels declined on both fronts. However, market breadth was positive as the market ended the session with 16 gainers and 12 losers. For today, we expect to see improvement in market activity, and we also anticipate profit taking to continue in some names. And also positive patronage across familiar names like Crown, ETI, and Sonatel, which is also expected to boost market activity. Over in Ghana, the market picked up where it left off, where composite index closing the session flat. With corporate earnings effect gradually wearing off, market activity traded mixed yesterday, with a marginal 3% improvement in volume, while turnover declined by 85%, and only for equities traded in the session yesterday. Going into today, we expect to see market recover in terms of activity levels with increased demand in names like MTN Ghana and Cowbank. And finally, in the Nigerian equities markets, the equities market extended the positive close as all share index appreciated by 69 basis points. This was supported by gains across sectors, from Airtel's 490 basis points price appreciation, and this will be the second consecutive upward trend for Airtel, to ETI's 545 basis point gain. We had Livestock and also Transcorp, all closing the session in the green. On the other hand, activity levels declined with volume trading down by about 19% and turnover also declining by 19.89%. Overall, the market breadth stayed positive with 29 gainers and 13 losers to end the session. Going into today, we expect the market to trade in similar pattern as investors continue to buy up attractive counters while taking profit on previous gainers. Thank you, and that'll be all from my end.
Thank you, Simbiat. We'll now be moving to Omorige, and he'll be taking us through fixed income and currencies. Good morning, Omorige.
Good morning. Good morning, everybody. System liquidity declined significantly yesterday to open at 117.5 billion negative from the 133.77 billion positive that was recorded on Tuesday. As a result of the decline in system liquidity, interbank rate tightened by over 400 basis points as OBB and overnight rate closed at 17% and 17.5% respectively. We expect that interbank rate will trade at higher levels today as players make funding provisions for the additional 104 billion NTB auction sale. The parallel market lost 5 naira yesterday to trade at 515 naira to $1, while the earning window opened at 411.5 naira to $1. The highest rate that was recorded yesterday was 412.26 naira to $1, while the closing rate was 411.4 naira to $1. Brent and WTI gained 5 cents and 4 cents to open today at 71.49 and $69.69 per barrel. The T-Biz market traded on a muted note yesterday as players awaited the NTB auction results. At the auction, the DMO sold a total of 456.33 billion across all the three usual tenors against an offer amount of 51.5 billion, with marginal rates on the 91 and 182 days remaining unchanged at 2.5 and 3.5% respectively, while the marginal rate on the 364-day paper declined by 85 basis points to close at 7.35% from the 8.2% it closed at the previous auction. Despite the muted theme that persisted in the secondary market, few trades were consummated on the 30th August 2021 and the 25th November 2021 maturities, with average benchmark rates declining by about 2 basis points to close at 5.33%. The OMO markets also traded on a muted note, with slightly bearish sentiment seen across the benchmark curve. Few offers were witnessed on the mid to long dated maturities. However, few or no trades were recorded yesterday, while average benchmark rates rose by about 5 basis points to close at 7.5%. The bonds market traded on a very active note yesterday with bullish sentiment seen across the benchmark curve. We witnessed interest on the short end of the curve during the early hours of yesterday's trading session as players tried to take position ahead of the NTB auction results. As the trading session progressed, we saw interest skewed to the mid and long dated maturities, particularly on the 2035, 2036, and the 2050 papers, while trades were majorly consummated on the 2024, 2034, and the 2050 maturities. Overall average benchmark rate declined about 10 basis points to close at 12.21%. The Eurobond market traded on a very active note yesterday, with sell-off seen on the sovereigns and corporates. The most actively traded maturities were the Nigerian 2025, 2031, 2038, 2047, the UBA 2022, First Bank 2025, and the EcoBank 2031 Eurobonds. For our expectations today, it will be very interesting to see how the bonds market reacts to the NTB auction results. And this is basically because of two reasons. The first one is the stance of the DMO. The bonds market has rallied this past few days, basically because players anticipated that the DMO will be less aggressive in the local front since they are raising debt in the Eurobond market. But this NTB result yesterday paints a different story entirely, as the DMO aggressively sold the offer amount by over 100%. The second reason is the rate cut on the marginal rate on the 1-year paper. Ideally, the market is supposed to moderate on the back of the rate cut. But then again, since the DMO has shown that they are still very aggressive in the local front, investors might just decide to be less aggressive with their bids in the market, and market might ease. So for the T-Biz market, we believe that the market will trade very actively today as players will come into the market to try to fill their lost auction bids yesterday, while we also expect the offer on the 1-year paper to moderate to sub 7% levels. That'll be all for fixed income. Thank you.
Thank you very much, Omorege. We will now move to Faith from Frontier Africa Reports, and she'll be sharing with us some headlines from across Africa. Good morning, Faith.
Good morning to you, and a very good morning to everyone. We're out here from East Africa, where the Kenya's Revenue Authority is expecting inflation tax adjustment to excise duties from the 1st of October this year, Kenya's central bank is authorized to price interest rates to digital loans, and Shelter Africa is set to raise $1.25 billion via bond issue by this year end. Tanzania's oil holder is set to pay 18.3 billion shillings to the Tanzania Revenue Authority on disputed tax. In West Africa and Nigeria, central bank has released guidelines for regulation and supervision of
Hi, Faith. It looks like we have lost you. Okay, let's quickly move to the Q&A segment. If you have any questions, you can send them in using the chat function available on Zoom. And if you're joining us on Facebook, you can make use of the comment section. And if you'd prefer to speak, you can use the raise hand function and you'd be allowed to speak.
Sorry, I lost my connection from here, so sorry. And from Frontier Africa reports, I'll quickly do a rundown of the reports we have here. Starting from Kenya, where the Kenya Revenue Authority is expecting inflation tax adjustment on excise duty from the 1st of October, that's this year. In Uganda, there is a completion of $1.7 billion Karina Dam, delayed until June 2022. And Tanzania Oil Sands also is set to pay 18.3 billion shillings to the Tanzania Revenue Authority on disputed tax. In West Africa and Nigeria, Central Bank of Nigeria has released guidelines for the regulation and supervision of credit currency companies in Nigeria as part of efforts to improve lending for micro, small, and medium enterprises. International Bureau PLC's director buys 8.35 million shares worth of 1.7 million. And Junior second quarter report is out, showing a revenue of $40.2 million and adjusted EBITDA loss of $41.6 million. Also, the Bank of Ghana is partnering German firm to debut first central bank digital currency in the African continent. Gambia is saying that BP has agreed to settle $29.3 million node fee to that country, that's in Gambia. Moving away from West Africa, in South Africa, the South African Continent Index is falling to 93.2 in July from 96.2 that was recorded previously. And Spain And also in South Africa, Spain has lifted global settlement offer by 3.21 billion rand. In North Africa, very quickly, Egypt is on holiday for Islamic New Year, and Bank Minister is planning green bonds issue in Egyptian markets. As the rapid of Tunisia's agricultural exports to Libya has risen 23% in the month of July. That'll be all from Frontier Africa reports. I'm very sorry about going on and off of my internet connection here. Thank you so much for listening to us.
Thank you very much, Faith. We still have some time to take in some questions. I can see we already have one question in the Q&A box. It says, with the NTB auction for 360 days declining to 7.3%, what's your outlook for rates till the end of the year? And do we expect this decline to continue? We also have another question for the equity analyst, and it says, do we investors start moving funds to the equity market as rates continue to decline in the NTB space? So I'll direct the first question to Dakbo to answer.
Okay, thank you very much. So mixed signals, like Omorige noted during his presentation, we saw the DMO looking to take 27 billion or 21 billion rather, and they took over 140 billion, 147 billion. On the other hand, rates decline. Now, two things or three things responsible. We've started to see rates at the interbank space also continue to decline. CBN hasn't been so aggressive with respect to CRR debits and general system debits. Again, you start to attribute that to the fact that their expectations that FX will come, all prices have been relatively stable and high. Eurobonds expectations also barring to we meeting all conditions, SDR coming in towards the end of this month. Some respite for them on the back of that on the FX front. So system hasn't been so tight. Rate at in the bank rate at double digits are starting to come back to single digits. NTB rates are also coming to single digits or are in the single digits, pardon me. So over the next couple of months, we still see, following DMO taking strongly from the market yesterday, we see the next bond auction most likely going that route as well. If we look at the last bond auction, they seem to have walked away from funds, but there was a non-competitive allotment as well. So pretty much shows that they still need funds, and we'll see that play out most likely at the next bond auction next week. Regardless, we think rate will moderate and will be closer to secondary market rates. We've seen yesterday we saw the longest 2050 trade sub 13 at some point during the day. So as we go into Q4 ending Q3, we start to see rates moderating on the back of Eurobonds debt raising, which will reduce what they'll probably need from the local space. But knowing that there's a strong revenue shortfall, we see that helping to balance things. But we ultimately, at this time, believe that rates will moderate going into Q4 and the end of the year. Thank you.
Thank you very much, Dakbo. The second question is for our equities desk, and it says, do we investors start moving funds to the equities market as rates continue to decline in the NTB space?
All right. Good morning, everyone. This is Sean speaking. So I believe the question is if we will start seeing investors moving to the equities market, looking at what rate is looking at in the NTB space. We believe yes, we'll likely start seeing a few investors looking at the equities market. Looking at rates being around 7% or thereabouts in NTB space, coupled with the fact that we've seen decent Q2 results. We've seen better results for a couple of those of these companies. So we believe investors will likely start looking at the equities market, but not to. But we'll still see a little bit of some headwind for the equities market. We're not seeing as much FPI coming to the market due to the FX challenge that we still see. And also, we believe there are still risk-averse investors that will just want to stay in the NTB, in the fixed income space. But by and large, we believe investors will likely start looking at the equities market once again. To see where they can put in their funds and to also be able to get better or more decent returns compared to where we see the fixed income market. So by and large, we see this play out in favor of the equities market but we might not just see it as much. We might not see that that much funds coming because of the other headwinds that still persist in the equities market. Thank you.
Thank you very much, Sheol. Looks like we do not have any more questions for today. Nevertheless, if you have any questions during the course of the day, you can send us an email at researchgroup@vetiva.com and we'll get back to you as soon as possible. We have now come to the end of today's session. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we thank you for joining us today. And we hope that you have a productive day ahead, and we urge everyone to continue to keep safe. Thank you and good morning.